time for our spotlight on credit cards, credit card deals, credit card debt, all things credit cards. And Ted Rossman's with us, senior industry analyst at bankrate.com. Thank you so much for being with us. When I saw 1.13 trillion, right, that's where we are. People are using their credit cards so much. There's delinquencies. The balances are big. What's going on here? Why is this?
Yeah, you've probably heard me say this industry saying before about credit cards can be like power tools, right? They can be really useful or they can be dangerous. It's all about how you use them. I think that is so true right now. It is roughly half and half in terms of cardholders who carry balances and those who don't. And that is really the massive difference here. The fact that we have some people who are using cards for convenience. They're doing more e-commerce. They're getting rewards, they're getting benefits, and then you have others that are carrying expensive debt. The current rate is a record high 20.75%.
Yeah, and that's the problem. And there's also a breakdown. I mean, the millennials, for example, are among those that are having the more serious delinquencies, right?
That's right. Yeah, the New York Fed recently reported people in their 20s and 30s are falling behind at more rapid rates. They're running up debt. This is worrisome. Again, it's a best of times, worst of times kind of thing. On one hand, we would expect these balances to grow over time because we have more e-commerce, we have population growth, we have less cash usage. Some of this is good for the economy. What's not good is at the individual level. If you're carrying an expensive balance, people are starting to fall behind. That delinquency rate has doubled in 2 years. Banks don't seem overly worried, though. They view this as a sort of normalization after an artificial low during the pandemic.
What to do when you have a lot of credit card debt? You said there's ways to do counseling. We hear people say, do not spend on anything you desperately do not need unless you get rid of that debt first. What do you say to folks who have credit card debt?
My favorite tip is to get a 0% balance transfer card. These are still widely available. We're talking about the Wells Fargo Reflect, the Citi Simplicity, US Bank Visa Platinum. These are all cards that offer 21 months with no interest. That is still alive and well, even in a rising rate environment. Right. I think it speaks to the fact that banks are willing to take on the risk because most people are paying on time. So in some respects, it's a sweet spot for them. More people are carrying more debt, but they're actually paying it back. But I think you can use one of these to your advantage by using that 0% term as a tailwind. Try to knock the whole debt out within that time. The banks are hoping people carry debt beyond that, but that's when the rate goes way up. So try not to do that. Divide what you owe by the number of months in that term. Try to stick to it.
Yeah, understood. I mean, also just inflation. I mean, we were seeing that food inflation, right, is at the highest levels. And I know we were at the 40-year highs overall, but still, while we've come down, we're still paying a lot. I mean, I know what it was. It was how much of your paycheck was dedicated to food. And it was a big portion.
It is. Well, I think a huge misconception among consumers is they hear inflation's coming down and they think we're rolling the clock back to 2019 pricing. Unfortunately, we know it doesn't work that way. It's that prices are still growing, they're just growing more slowly, they're building off a higher base. This is what's squeezing people. And I think this is part of why retail sales have fallen month over month in 3 of the last 4 months, is that people are starting to push back a little bit and they're feeling squeezed because the rent is up, the grocery bill's up, and something's got to give. And people are taking on debt, but I think they're also starting to pull back on their spending a little bit.
I want to talk about the deal, Capital One Discover deal. This would be making a huge credit card company, obviously the largest. And the clientele of that group is different than an American Express, for example. I don't want to run out of time and sort of over ask the question, but there's the deal, and then there are all the other credit card issues, MasterCard, Visa. Where do we stand on all of this?
I think that with this deal, Capital One is actually trying to become a lot more like Amex because they're going to be a lender and a network now that they acquire the Discover network. I think even before this, Capital One has been moving more upmarket in recent years. So we used to think of them as sometimes more of a subprime issuer, and then they kind of moved into middle market. They've been moving upmarket with premium travel cards, higher annual fees, proprietary lounges that they operate at select airports. I really see them moving more into the upmarket credit card business.
So do you think the deal goes through?
I've been hearing 50-50, maybe 60-40 in favor. It's going to be close. I actually think it's ominous that news yesterday, totally different industry, but that Kroger-Albertsons deal is on the ropes now.
Right. So is Chevron Hess.
And we saw that with
Right.
Spirit and JetBlue. I feel like it's not a great climate right now for these kind of high-profile mergers. So maybe it's a coin flip. We'll see.
Yeah. And as far as Visa and MasterCard, do they seem healthy? Do they seem like leaders?
They're doing great, yeah. I think this really secular tailwind, this push towards digital transactions still has a lot of room to run. It's a very good business to be in. What's unique about those networks is they don't even have the credit risk. I mean, they're just benefiting from more people using cards. From a lender standpoint, though, they're doing pretty well too. Because
just quickly on fintech, like Square or using that as a bank, a lot of people are doing things like that. Any thoughts on that or how that's going?
I think that's going to continue. Yeah, I think all these super apps, whether we talk about Cash App or PayPal and Venmo and even Apple. Apple has a whole suite of financial services. I think it's a hot area.
Oh, okay, because people are actually depositing their checks straight into their Cash App, right?
Yep,
for
exactly.
A block, for example. Okay, right. Who needs your bank, I guess? I need my bank, but some people, I guess, don't. Thank you so much. It's great to see you. Ted Rossman of bankrate.com. Glad you were here.